I mean, there was talk a few years ago about a recession. We didn't have that. So maybe we need to give more credit to, inflation fighting credibility of the Fed, to the resiliency of the U.S. economy. And we got to be careful stewards, but we also need to be grateful that we have such a robust system in place.
To pick up on that point, there's an old saying in baseball that sometimes you'd rather be lucky than good. And I think if you're a monetary policymaker, you want to be both good and maybe have some positive luck. I do think that one can make a case that the U.S. has been lucky in two senses. One, we have an incredibly innovative, efficient, and successful tech sector, which is really the envy of the world. And it's also a sector that is able to tap capital markets and expand, do bricks and mortar. Remember, you and I remember back in the days when tech was part of the weightless economy, which was all ideas and software. And now part of the important reality of AI is in order to train those large language models and to get a potential productivity boost, you need a lot of old-fashioned bricks and mortar capital spending in the economy. And I think part of the resilience in 24 and 25 was that the headwinds, which might have been slowing growth from other dimensions, were more than offset by a boom in demand, coming from the tech sector too. But I think, again, that's a plus. That's part of the U.S. exceptionalism story. Is yes, it was lucky that tech investment picked up when it did, but also it reflects on the fundamental strength of the economy.